All right, it is September 3. Everything is updated as of 8/31 or 9/1. Anyway, September 2018, we have three sell signals. Um, Thomson Reuters, TD Ameritrade, and Cisco. So we're going to be looking at possibly replacing these. We also have some buy signals, but nothing really big enough to warrant putting any more money in, except for GE. So I'm just going to go through these real quick and give you just a quick update. Thomson Reuters has been doing fairly well. They have gotten their European issue in order. They're selling off their financial news piece of the company, but they're keeping some of the profits. So that's really good. They still have the tax thing going for them. They still have the legal thing going for them, which is what they're known for. But the financial news aspect, which has really been a stalwart in the financial industry, they've sold off. Rogers Communication, nothing really to be said there other than the fact that they're still growing. They're still bringing on more cell phone customers. The cable TV thing that they put out isn't doing so well, but they're steady. Dividend is good, so no problem there. American Electric Power, they are just a utility. We've talked before about just constant earnings. Contracts with the government tells them exactly how much money they're going to be making when. Currently, they are in talks with, I believe, Oklahoma to get their rates approved, and a couple other places too. But most of the states they operate in, including Texas, has already approved their profits for the year. They have gotten into the wind project stuff, but not as heavily as some of the other utilities. And they were just denied one wind catcher project. I believe it was Oklahoma as well. So that was kind of a negative for the company in the short term, but long term though, I mean they're doing great things, still selling equipment and stuff like that to other utility companies. ExxonMobil, not a whole lot to say there. They are just continuing to do what they do. They have moved into selling gasoline to Mexico, and they are still finding oil, all over the world. So nothing new there. Coca-Cola European Partners, they're coming along. It's a new company, sort of. They were part of Coca-Cola Europe, and they split into the Coca-Cola Bottling Company, which is what we're in currently. And it's just been same old really. Nothing has changed much. What their focus is always on is shipping crates of drinks to companies and trying to market those drinks in the stores to improve sales. Pfizer, same thing. Not a whole lot to be said about Pfizer. They have a lot of new drugs that they're always working on and experimenting on. No blockbusters as of yet. They have patents on drugs that are always going away because you can only hold a patent for so long and then the drug becomes generic. So they lose a little bit of money that way, but then they regain it with some of the new drugs that they're coming out with. There's been a lot of talks about breaking the company up. Nothing has been done as of yet. I am looking forward to it. It'll be really interested. I'll be really interested to see how the company breaks up and exactly what pieces go where. They have the consumer over-the-counter drugs, and then they have the prescription drugs, and then there's also the rare disease drugs as well. So we'll see how that plays out. But otherwise, stock price hasn't moved much at all. Hasn't gone down, hasn't gone up. It's right where it is, and we're constantly getting that dividend. GE is and has been the biggest story of our portfolio for quite some time. They are down quite a bit. They got down to 12 something and they're back up to roughly 13 right now. As you can see, we're in at almost $18. What we've been doing is we've been shorting puts on this thing, and so we've been collecting not a lot of money, you know, $5, $10 here and there every month. Basically, you know, saying that if this thing ever does go down to 12, then we'll definitely buy more. So just going to keep monitoring that. At some point, we may have to buy more, or we may get out at a loss. But for right now, the dividend is fine. The company is trying to turn around. I think that it can definitely happen. They're selling off assets for cash, which is not bad, right? They're really slimming down. I would love to see this company do nothing more than maybe aviation and healthcare. Right now, they still have the power company that sells the equipment to utility companies and things of that nature. They also have a train company where they sell train engines and trains and stuff like that. That one I think is getting sold off here very shortly. So that's what's going on with GE. Annaly is a straight interest rate play. The dividend right now is right around 10%, so that's good for us. The price has been roughly $10.50. It's up to about 10.70 right now, which is a dollar away from where we got in at. But the dividend is good. The company is doing well. The price reflects the interest rate environment. Annaly is one of the largest mortgage sellers in the country. Well, the largest, not one of the largest mortgage seller in the company. And so what happens is when they sell a mortgage at 3%, and then the interest rate goes up to, let's say, 4%, well, that's a loss for them, right? Because they could have sold it for 4%. So as interest rates rise, we'll see the price come down some. But the great thing about Annaly is they also sell a lot of variable rate mortgages as well. So when interest rates rise, well, their income rises with it because they're able to increase the interest rate on those loans. Annaly also, if you can imagine, has derivative instruments as well that helps to offset those losses when interest rate rises. And it's just as simple as buying a security that increases in value when interest rates rise, and so that helps offset some of those losses. Weyerhaeuser. Oh, I need to mention too. Annaly, we have been able to short a few options on Annaly, but not a lot. The premiums are just not high enough right now to really make any good money off of that. But we have gotten a few, and I continue to look for those options every month. Weyerhaeuser, right now, this is another, just straight interest rate play. The price is currently at about 34. We're in at 32, but because we only have very few shares, we're not going to get a buy signal until this thing gets much higher. So that's what's going on with Weyerhaeuser. Right now, interest rates rising makes housing fall. And so Weyerhaeuser does nothing more than sell lumber, right? So as interest rates go up, we expect Weyerhaeuser to come down some. Also, there has been some talks concerning the Canadian lumber. Weyerhaeuser owns forest in Canada as well as the U.S. Recently, there was a tariff put on Canadian lumber, and so that hurt Weyerhaeuser a little bit. But we're in new talks with Canada, and we're assuming that something will get done to better their situation, and we may actually see a little bit of a pop from Weyerhaeuser. Another thing that's really important to mention about Weyerhaeuser is they are a real estate interest trust, and so what that means is that the entity itself does not pay any taxes whatsoever. All of the income goes to the partners and the owners of Weyerhaeuser. That's how that works. TD Ameritrade, we got to sell on this one. The banks have been, great, right? Rising interest rate environment means that banks can make more money. TD Ameritrade also has taken advantage of the Bitcoin and the virtual currency, and allowing some of their traders to trade that on their platform. So that's helped them out a little bit. TD Ameritrade right now is the largest retail investment company in the states, and so there's not a whole lot negative that you can say about TD Ameritrade, but we will look for replacement to see if we can get a better profit on that. TD Ameritrade was at about 61. Today they're hovering right around 60, and so you see here we're in at roughly 57. Cisco. Technology has been one of the biggest gainers in the past, I say, year and a half, and Cisco has taken advantage of that. But I have to say, Cisco, I don't think has performed as well as some of its peers in the industry, but they've done fairly well. I think right now the price is somewhere around 47, and we're in at 44. So we've made a little bit of money there, and we'll be looking at possibly replacing Cisco with another company or staying where we are.